Welcome to the Investors Trading Academy event of the week. Each week our staff of educators tries to introduce you to a person of interest in the financial world. This could be a person in government or banking or an important investor or trader. This week we are going to take a look at rock star David Bowie and Bowie Bonds. The Mail Online wrote this week that following the tragic news of his death this week, fans of David Bowie have flocked to various sites to listen to his music and pay tribute. The iconic star's catalogue has drawn a staggering 51 million video views within 24 hours, breaking Adele's comeback single Hello's record, which racked up 36 million views in October. Fans were surprised to learn that the star had amassed a fortune in excess of $200 million and that he had released 111 singles in his career, as well as 51 music videos and 25 albums. But the biggest surprise of all was learning about Bowie Bonds. Despite his huge success, the singer was thought to be close to bankruptcy in the 1970s with a string of bad business deals. But an astute financial move in 1997 brought him millions, allowing him to buy back the rights to some of his most popular work from a former manager. In the mid-1990s, David Bowie, his financial manager Bill Zeisblatt, and banker David Pullman came up with a new scheme to generate cash from Bowie's extensive back catalogue. In 1997, Bowie sold asset-backed securities dubbed Bowie Bonds, which awarded investors a share in his future royalties for 10 years. The securities, which were bought by US insurance giant Prudential Financial for $55 million, £38 million, committed Mr. Bowie to repay his new creditors out of future income and gave a fixed annual return of 7.9%. He struck a deal with record label EMI, which allowed him to package up and sell bonds on royalties for 25 albums released between 1969 and 1990, which included classics such as The Man Who Sold the World, Ziggy Stardust and Heroes. Mr. Pullman told the Daily Mail the deal saw that the bonds were paid off and Mr. Bowie then retained all his rights. He was astute financially and he had the foresight to have things set up then that would look after his family. He was smart enough to have confidence in himself. Most artists sell themselves short and they don't hold out for the rights. He was able to retain his legacy. His songs were his baby. The model wasn't necessarily good for all asset-backed financing, Mr. Dane says. Think of the later bundling of subprime mortgages. Bowie's innovation lay in using intellectual property to back securities, says financial writer Chris O'Leary. He adds that banks were already starting to package up assets like mortgages into a new type of security in the 1970s.